Hi, this is Linda Welsh from Linda Welsh Realty Group in Austin, Texas. I am here today to talk to you about how to talk to your buyers about higher interest rates. We all know that we've had lots of information thrown at us through economic advisors and the media about this, but let's just pick it apart a little bit and talk about how to talk to your buyers about what's happening in the market. Number one is to make sure that you are informed and that you know, maybe even daily, what's happening in interest rates. Just because the Fed raises their rates does not mean that the interest rates raise their rates on mortgages on exactly the same time. So if you don't have a trusted mortgage advisor or a loan officer, make sure you get on their text list so that you get daily updates about what those rates are. Be well informed about the current financial market and keep a close eye on those economic indicators, some of which are inflation rates and some are unemployment rates, things of that sort. And provide accurate information to your people. Be honest and explain that interest rate and fluctuations are a normal part of the real estate market. And in fact, what we experienced within the last couple of years has really never happened before. We've never had interest rates as low as we saw the last couple of years. So the chances of us ever going back to that place in time is pretty much slim to none. So what we are experiencing now is actually a pretty normal interest rates. There were times when interest rates were as high as 18%. Of course, the prices of homes have gone up significantly, so that can have a major impact what your client will be paying. And for a lot of people, what they really want to know is, what is my monthly payment going to be? So the second thing to talk to your client about, or your prospect, is about the wealth building potential. If you're a fan of some of the regular podcasts, maybe Dave Ramsey or something like that, you'll notice that they'll talk about this quite a bit because truth be told, if you have somebody who is renting, they're actually paying for the owner of that property to pay their mortgage payment if they have one. They have no possible impact on their wealth growth. And historically, prices have gone up significantly over time, even through a downturn. In fact, we're probably expecting interest rates maybe not to change that much next year, but prices to go up slightly, maybe even 4%. So if that were to happen, wouldn't you rather own an asset that is appreciating at the rate of 4% or better per year? Of course, there's no guarantees on the amount, but historically that's what we've seen, is that prices almost always go up eventually. So you may just have to help your clients understand what their ability to purchase is. And there are some other tools that can help them get there. Number 3, explore different mortgage programs. Talk to the clients about different types of mortgages that are available. If they're a veteran, maybe it's a VA loan. Adjustable rate mortgages are a really popular one now, and it's very common for somebody to perhaps try to negotiate a seller contribution to the buyer closing cost, which could buy down the rate. So when you have a trusted loan officer that you're recommending, or a few of them that you're recommending to your clients, make sure that you talk to them about that and maybe plan on what that would look like and what their payments might be per property. Don't forget to include their property taxes, their insurance, and their any homeowners association fees if there are any, or condo fees. So those adjustable rate mortgages could be a 2-1 buy down, where the first year you're paying 2% under the going rate, the second year you're paying 1%, and there are other ones as well. So make sure that you talk to a few lenders to find ones that have programs that might work for your clients. And this could be on a case-by-case basis. So make sure that you're paying attention to what's going on in the market, make sure you're well informed, and that you're guiding your clients to a solution that works for them. This may mean adjusting their price point a little bit, but prices have adjusted somewhat, so it might not be that much of a difference that they were looking at in their payment over a couple of years ago when people were overpaying for homes. This is Linda Welsh again from Linda Welsh Realty Group. I'm here to help you with your business. Give me a call. Thanks.